So I'm speaking to you about Finsbury Growth and Income Trust, and we're sometime towards the end of the first week of October 2018. Now, Finsbury Growth and Income Trust's financial year end is the end of September, so we've only just completed the company's financial year, and I don't have exactly the official statistics for the performance over the last 12-month period, but I'm going to tell you it's something like an NAV, net asset value, total return for Finsbury of plus 13% over the 12 months, September 17 to September 18, and by contrast, the FT All Share Index is up something like around 6% on a comparable basis. So it looks as though I can feel satisfied, I hope shareholders can feel satisfied that we've been able to deliver an acceptable return for shareholders over that period. I'm always conscious, though, of the extent to which luck can play a part in any given 12-month or 6-month period. We had a couple of takeovers of long-standing holdings last year, which have boosted our returns, and of course you never know whether you'll get more takeovers next year or maybe not for another 5 years. So the performance is satisfying, but I wouldn't want to necessarily extrapolate that into next year, for instance. What I think, though, is more significant and is very gratifying for us is the dividend return, or the dividend growth from Finsbury over the last 12 months. We have already announced the final dividend, and adding the two dividends together for this year, we've increased the dividend by just under 8%. The dividend this year totals 15.3 pence, and I can't help but think back to when I was first appointed to run Finsbury back in 2001, when the company's dividend at that time was just over 3 pence. So, in other words, over the 17 years or however long it is, we've been able to grow the dividend nearly fivefold, from around 3p to 15p. And in many ways, I think that is the best long-term measure of the wealth and the value that we've created for shareholders. It's getting rich relatively slowly, but nonetheless, I'm hopeful that it can continue. So can we continue that steady pace of dividend growth for Finsbury? Can we continue that steady pace of value creation for shareholders? Now listen, I know that there are a lot of macroeconomic issues out there right now that make people worry about whether that sort of wealth creation is sustainable. We can talk about Brexit, we can talk about international politics, we can talk about rising interest rates, and I acknowledge that all of those are issues that, markets, investors are worrying about today. But I have to keep coming back to the individual companies that we're invested in within Finsbury's portfolio. And I have to say, almost without exception, what I see from those businesses is good news and encouraging trading and encouraging developments for these companies' well-being over time. And I've got to believe that that is more important than what we will hope to be a short-term macro concerns. So I don't know. I just wanted to share with you two separate statistics or anecdotes that seem to me to underwrite a sense of optimism about not just what we're invested in, but maybe suggesting that underlying the world isn't in such a parlous state as some of the headlines might suggest. So first of all, I was extremely encouraged to note that over the 12 months ending June 2018, so a couple of months ago admittedly, but over the 12 months to June 2018, global shipments of Scotch whisky were up 12% year on year. Now, just by contrast, in the preceding 12-month period, global shipments of Scotch had been up 5%. So, in other words, there's been a marked uplift in the amount of Scotch being shipped around the world, and obviously that also means the amount of Scotch being drunk around the world. Why is that? Two central reasons. One, Latin America has stopped getting worse. Latin America consumes a lot of Scotch. That part of the world has been through the ringer over the last 2 or 3 years, but it looks as though for some of the major economies there, the worst is past, and that there has been actually a recovery of Scotch shipments to Latin America. Secondly, and even more importantly, demand for Scotch and all premium spirits in Asia, and particularly China, continues to grow. Now, to us, that fact about that acceleration in Scotch is such good news. One, because it confirms that actually this long-term trend of increased growth, increased wealth around the world, particularly in some of the so-called emerging economies, continues. And that is a big, big bedrock for any optimism about the way that the world may be over the next few years. Second, it's obviously very, very good news for what is our biggest holding today in Finsbury Growth and Income Trust, which is Diageo, the world's biggest Scotch business. So that was reassuring and pleasing to me. Second thing I wanted to highlight, you might think it's an odd thing for me to point out, but I'm going to do it anyway. In the month of August, August 2018, in the month of August, the share prices of Juventus Football Club went up 40% just in August. The share price of Manchester United went up 27%, and the share price of Celtic Football Club went up 22%. Now, so what, you might say? Well, actually, it's quite significant for us because we own some shares in Juventus in Linsell Trains Global Equity Fund. We also own shares of Manchester United and Celtic in your company, in Finsbury. And what that big move in the share prices of those sports franchises is telling us, we are sure, what it's telling us is that the value of must-watch entertainment, must-watch content, the value of such content is going up. We all know that digital technology is changing the world right now, and it's absolutely clear to us that what digital technology is doing is helping companies that must have information, must have entertainment rights. It's helping them develop and grow their businesses. This is another major theme across Finsbury's portfolio. It's another big driver for rising equity markets, in our opinion, over the next few years. I don't know if you know who I mean when I mention the name Nick Taleb. Nick Taleb is the ex-hedge fund trader and now academic philosopher, author, who wrote Black Swan and Fooled by Randomness. I don't know if you know those books. Anyway, Nick Taleb's most recent book, which I recommend to you, by the way, his most recent book is called Skin in the Game. And there is a great quote in Skin in the Game. What Taleb says is, don't tell me what you think, tell me what's in your portfolio. Yeah? So do you understand what he's saying? All of us, me, all of these talking heads, we've all got a view. We can all tell you what we think is going on in the world. But what Taleb is saying is, I don't care about what you think. What are you actually doing? What are you actually doing with your own savings? Are you actually, you say you're optimistic, are you actually putting your own money where your mouth is? Is your skin in the game? And so I just wanted to conclude this by telling you, just being candid about this. Today, the day that I'm recording this, today I have bought some more shares in Finsbury Growth and Income Trust for myself. The market's had a bit of a wobble. I've taken an opportunity from that wobble to buy more shares. So all I can assure you is what I've been saying earlier about the prospects for a continuation of satisfactory returns. I believe it, and I don't just believe it, I'm actually prepared to invest behind that conviction as well. So for what comfort that provides to you, I don't know, but let's hope it does, and let's hope we're right. Thank you.